Mr. Clerk, can you please read Bill 212?
Section 19-89.2, credit union exemption would be repealed entirely, and language in Section 19-77B6 pertaining to exemptions for credit unions would be deleted. Introduced by Ms. Willie.
Chair Eoff and members of the committee, I am Dennis Tanimoto, President of Hawaii Credit Union League, the trade association for 62 credit unions in Hawaii, 9 of which are domiciled on this island. As stated in my written testimony, the credit unions of Hawaii County and the entire state strongly oppose Bill 212. Credit unions are nonprofit, member-owned cooperatives that provide affordable financial services to members who are primarily working-class citizens and retirees. Similar to nonprofit healthcare agencies that provide medical wellness to their patients, nonprofit credit unions provide financial wellness to more than 147,000 members of credit unions in Hawaii County and 806,000 members throughout the state. Unlike what some refer to as traditional for-profit financial institutions, nonprofit credit unions can only serve a limited field of membership with a limited, narrow array of products and services. Furthermore, nonprofit credit unions have no access to outside capital like traditional for-profit financial institutions do, and each credit union is run by a volunteer board of directors, democratically elected by member owners under a democratic one-member, one-vote concept with no proxies. Credit unions are structurally unique, well-accepted, and regulatorily restricted in the financial services marketplace. To say the real property tax exemption gives them a competitive advantage over traditional for-profit financial institutions is simply not accurate. As evidence of credit unions not having a competitive advantage over traditional financial institutions, the state's youngest and smallest bank, Ohana Pacific Bank, was chartered in mid-2006. So in less than 10 years, this bank has grown to over $120 million in total assets. That is more than 2/3 of the 9 credit unions headquartered in Hawaii County, many of which were chartered over 75 years ago. To put this in perspective, the median-sized credit union in Hawaii has about $48 million in assets, which is about 40% of the size of the state's smallest bank. In summary, the original justifications for the credit union's real property tax exemption, their nonprofit status, social purpose of providing needed financial services primarily to working-class citizens and retirees, and public benefit of keeping rates and fees affordable for members and non-members alike have remained unchanged over the years. A tax on a credit union is actually a tax on your members. We respectfully ask that the nonprofit tax status of credit unions be retained by deferring further action on Bill 212. Thank you for the opportunity to testify.
Our credit union started with 10 struggling coffee farmers during the Great Depression who were unable to get loans and services from financial institutions that existed back then. So in 1936, they got together and signed a charter to start a new credit union, the Kona Farmers Federal Credit Union. Although our charter changed, our name evolved, and we merged to assist and continue to support member owners from other credit unions, we never forgot our fundamental philosophy of people coming together to help each other succeed, especially during difficult times. During the more recent financial crisis, when our other financial institutions stopped lending, we continued to lend to assist our member owners to continue supporting them in times of need. When local businesses closed down for various reasons, we provided assistance packages to help our member owners to their next employment. We continue to be the only financial institution serving the Kohala community after the only other financial institution in that community left town. We provide financial education and literacy to our communities with free financial literacy seminars available to the entire community throughout the year. We provide free financial literacy curriculum and material to all middle and high schools in Hawaii Island through a program called Banzai. We operate 3 student-run credit unions in Konawaina, Kelekehe, and Kohala high schools, providing them with live work and volunteer experience in running a credit union. We partnered with the state and county to provide the Kids Savings Program in 8 public elementary schools to provide the children with thrift and savings. $17,500 in scholarships go to high school seniors each year, with a specific scholarship focused on those pursuing a degree in agriculture to encourage our youth to pursue maintaining our future sustainability. We support and assist in over 70 organizations with funding, in-kind donations, and most important of all, sweat equity, our people. Organizations like Hawaii Island United Way, Hawaii Island's Food Basket, Relay for Life, Kona and Kohala Hospital Foundations, just to name a few. Hawaii Island has over 194,000 residents. Our credit unions, 9 of us on this island, service those of modest means. 55.8% of our Hawaii County residents are classified as low income, and while 40,800, or over 20% of these residents, are member owners of Hawaii Community Federal Credit Union, over 147,000, or 75% of these residents, are credit union member owners to any one or more of the 9 credit unions on Hawaii Island. I humbly ask you to consider preserving the nonprofit tax status of Hawaii's credit unions. Adding higher costs in the form of a new tax would negatively impact our ability to continue our current high level of services to our membership and communities. Thank you. Thank you.
My name is Nellie Maderas, and I live in Honokua, South Kona, where my family and I farm coffee, macadamia nuts, and taro. I am also the Corporate Development and Marketing Manager for Hawaii Community Federal Credit Union. But I come before you not as an employee of a credit union that is affected by Bill 212, but as a tax-paying citizen of the County of Hawaii who will be affected by this bill. I am the first-generation daughter of Filipino immigrants who worked in the sugar plantation, then climbed the working ladder to work for the Greenville Estate. With only a third-grade education and a menial job, my father taught himself other skills to provide for our family of 5. He was a self-taught barber, tailor, butcher, and movie projectionist, to name a few. But what helped him maximize and manage his meager earnings was being a member of a credit union. The increased benefits of higher dividend rates and lower loan rates helped him save his money so he was able to raise his Hawaii family and still be able to have enough to send back to the family in the Philippines. He was able to finance his very own home after living in workmen's housing for over 30 years. And he was able to send me and my 2 sisters to college. And the credit union has continued to be there to provide financial services for the milestones of 3 generations of my family. But Bill 212 is threatening the lifeline of affordable financial services to credit union members. I recently acquired my mother's home after her death and was close to death myself when I learned that I also acquired a real property tax increase from $1,000 a year to $4,000 a year because we lost our age exemption. And although I live in the home half of the time, I was considered a renter, not an owner. And on top of that, insurance on the home would be renter's insurance with a separate policy to cover the contents of the home. This situation caused a ripple effect, causing major financial burdens for my family. I liken this to Bill 212 and the disastrous financial ripple effect it would cause to not only credit union members, but to the community and the economy of Hawaii Island. Living in Hawaii, there is a fine line from being a homeowner and being homeless. Credit union members are able to afford to live in Hawaii because of the affordability of financial services, so people can own their own homes, send their kids to college, and sustain their farms and businesses. Bill 212 will diminish that line, forcing people to move away, taking revenues such as general excise tax, income tax, and sales tax away from our island. Of the 194,000 people living on Hawaii Island, 147,000 of them are credit union members. Bill 212 will negatively impact 75% of our population and economy. I humbly urge that you oppose the elimination of the credit union real property tax exemption and oppose Bill 212. Mahalo.
Mahalo.
I'm Marianne Otake, Vice President of Hawaii First Federal Credit Union. We are so passionate about meeting the needs of those in our community that in addition to our branches, we created 2 community resource centers that are used by many on a daily basis to obtain assistance with small business development, resume writing, job seeking assistance, credit counseling, volunteer tax preparation, adult and youth financial education workshops, and computer access, all for free. The CRCs located in the Kamuela and Hilo serve not only our credit union members, but are available to every resident of Hawaii Island. Seeing the economic and credit struggles faced by many, Hawaii First FCU created an emergency savings program along with unique loan programs. The savings program has resulted in over $430,000 being saved for emergencies, and our unique loan programs ensure that if an affordable auto loan is needed, we can make it happen. No credit or credit challenged, we can help members avoid predatory auto dealer loans. We also offer emergency small dollar loans as an alternative to high-cost payday lenders. We see a need and we fill it. Without our tax exemption, the offering of the above services would be in danger. Please don't take these services away from the people who need our help the most. Mahalo for your time.
I was on the Real Property Tax Task Force. The question of whether the tax exemption for credit unions came up at that time. And I think, and also in terms of based on the consultants' reports. And this is one of the bills or efforts. We didn't do as a task force do a bill, but was discussed that it should be discussed or addressed whether there should be special treatment for credit unions. And so I'm bringing it to you. I think there are pros and cons. And it's not, it wasn't so much a discussion of, okay, the credit unions versus the banks or the profit banks. It was really looking at that whenever you give a tax exemption, somebody else is paying that money. And I look at just the number of people in my district who as individuals are coming forward in terms of the appraisal value of their property having gone up, and looking at a number of them probably losing their homes because they cannot make this payment. I and a couple of the others on that committee sort of looked at, well, what are the ways that we can really make things fairer and close any tax loopholes? And in my mind, ultimately, we would look to see if we could perhaps raise the current exemption that we have for homeowners from $40,000 to $60,000. So it's each time it's always hard to take from someone that's got a special privilege. Okay, you give a special privilege, and I certainly am aware of the good that the credit unions do, and it's just really is this really fair? The credit unions were, they started, and it's a little cooperative, but it's now sort of moved into a different realm. And I haven't wanted to talk, individually with council members, but each time we give a special privilege, we are placing on everyone else to make up that difference. And maybe I'd like to call Deanna, Elisa ahead. So I wanted to bring it up to you all and get a feel. Again, I know when I went on to that task force, there wasn't anyone else who wanted to be on it. Deanna, if you or Lisa would like to make any comments. And also, I don't know, long ago we had some idea what the additional amount of money that we're not bringing in that this would raise, and I don't remember if we really got a good number on that, but just ask for your comments.
I think if the credit union exemption went away, it would bring in about $250,000 in that ballpark. We do get complaints from different banks asking why it's different. But, in general, I think we told you even when we met that we can't really take a stand. We even have the county credit union that, many of our employees are a member of as well. So, this is, it's up to you guys, whatever you decide to do.
And let me say, and that's sort of the approach where I'm at. I think we ought to look at the different issues. I'm going to continue to bring up issues, and where we want to go. I do recognize, again, no one's saying that the credit unions haven't done a lot of good, but should they not be paying some fair share of property tax relative to everybody else? So I open it up and listen to you all.
You the one created the task force, I think, right? If I'm not mistaken. And then you asked me to be on the task force. Okay, so it wasn't like you were put onto it. You the one created it. Okay, so just want to make that clear on the record. Yeah, is that true? I think you, I didn't do that, Rezo, but part of the task force when we met and the discussions, did we ever talk about the credit unions?
Lisa Mira, Deputy Director Finance. I believe credit unions did come up at one point
Oh, yeah.
throughout the conversation, and it was a concern from the banks. We didn't decide at that point whether we are going to go ahead and remove the exemptions, though, so that didn't come up during
Yeah,
the talk.
okay. Yeah, 'cause I
but we
don't-
covered
oh.
all the exemptions.
Okay, yeah, because I don't remember really talking too much about it. That's why, right? And then, so what is the amount that we're looking at? If
It's approximately $250,000.
okay, and then like, I hate to say, but Miss Willie brings up about her district, about the property values. I mean, but those locations that she talks about, isn't it like prime properties?
It's in West Hawaii, so the land values are higher.
Right, and it's some of them are like bigger, right? It's like a couple acres or 1 acre lots or whatever, right?
Yeah, they vary in size.
Yeah, and then the people like I've always mentioned, like people who live in Hilo, we have generations after generations after generations living in that same home, right? Whereas in those locations, I think most of them don't have that, right? Unless they're in Waimea maybe, right? But then if you're going on the outskirts, then you wouldn't have too many of those, right?
Well, I mean, we do have many areas, a lot of plantation villages do have people that have been in their homes for generations. Hilo, typically, there's a lot more older people, if you will, and so we do have a lot more exemptions due to the age calculation that is being given in the Hilo area.
Okay. Thank you. Because I at our task force meeting, because I mean we talked about a lot of things,
Yes.
right? And
It was several years ago already, too.
Well, that's true too, yeah.
Mhm.
Okay, but I were.
Okay,
It's just that the
Mr.
meetings took so long. But okay, but thank you.
Yeah, I remember that the formulation of that task force. Councilwoman Willie didn't want to be on that task force, so then I put my name in there, and then she quickly wanted to stay in. So it was. I can't believe you're using that as a reason why you're putting this up. And the other part is, you mentioned yes, the credit unions are providing good services, but I guess it's not good enough for this exemption, because that's why you're trying to take this out, because you feel that maybe we should look into using those monies for home exemptions. And what did you say, raising 40 to 60,000?
That was one possibility, but that wouldn't be just to this. That was the overall closing loopholes, to look at what other possibilities, just looking at what would be fair.
Well,
What
you
would be
said
fair?
increasing home exemptions, so that's taking money out again. So what was the suggestions
That would be
you
more
had?
across the board than for one particular group and one particular membership.
And I can probably tell you it's gonna be more than 250,000. So this is not gonna cover it. On top of that, I
I think you're.
I really respect Councilman Chung, because he said during the last bill, everybody was very professional. And I also want to keep my professionalism. I'm a bit upset, I can tell you that. And one of the things that I feel credit unions do is they help out their members. Compared to, the thing what really pisses me off about this whole thing, because again, in the same industry, it pits the same companies against each other. Not necessarily the same company name, but they're in the same business. And now you have corporate banks pitting against credit union banks. And I've gone out to different people that I know in different industry, and the corporate banks are telling me, yeah, credit unions don't deserve it. And the credit unions are saying, yes, we do deserve it. So here again, I'm back into the council, and I'm sensing another divide in the community, but this time it's in the banking industry. And here, I'm a big proponent on membership-based industries such as what the credit unions are. At the time when we have an economic downturn, they are most likely going to help out their members compared to a corporate bank that is going to be specifically for profits, and they're going to rely on cutting costs and making sure that their profits are up. And I'm not saying that's what the corporate banks are all about too. They provide great services that sometimes the credit unions can't do because they have a lot of infrastructure and purchasing power. But here we are again. Thanks to Councilmember Willie, you brought this up without talking to the people who are going to be affected. And I wish that you would just not introduce things right off the bat and go out and have these meetings with these stakeholders and work things out before bringing in a bill like this. I really wish you don't try to figure this out publicly rather than I think I've said a lot, and my point I really want to come across is I'm not going to be supporting this bill, and I hope council members, you also don't support this as well. Thank you.
You know, it comes down to fairness in tax assessment. But I think I would like to get a better picture of what the holdings of the different type of institutions are. Because if we're looking at the property owned by, say, a credit union, I don't think they own that much property unless they're holding it as security against a loan taken. But for their operations, I would assume it's basically their operation, if they even own that. You know, I've been a member of credit unions. In fact, I'm a member of PUNA, Hawaii Federal State Employees, which is now HFS. That has changed name. Pretty much in the same. I remember when it was down in Wainuinui Street, a long time ago. These banks gave me my first opportunity. I mean, these institutions gave me my first opportunity to build my first home. I'm never gonna forget that, because nobody else would have given me that. That's the difference between a federal credit union and one bank. The bank wouldn't touch me those days. I don't blame them. I don't think I would either. But I'm trying to be serious. You know, their missions, I believe, are different. Now, if we would like to, I think, communicate or see what the credit unions might think in terms of addressing the fees for or bringing in income, I think they would be willing to, but not something that's imposed and they don't even have a say. And that's the feel. I see the shaking of the heads over there. I feel that's what was kind of what happened. So I don't think I can support this. Not with the amount of testimony that came out from the people that it is going to affect.
When I was probably about 8 years old, I remember my auntie who lived in Honolulu, and her husband was working for the plantation, yeah? Mm-hmm. And for some reason, she said something about how proud they were that they had finally gotten their credit union. You know, this 50 years ago now. So I guess now when I look back, they must have gotten chartered or whatever. Maybe I have no idea what happened, but you know, I remember that. And Now, fast forward to now, now I understand what it was all about. You know, it's just regular guys getting together so that they can, you know, pool their resources, and you know, get financing. And you know, that's really a part of our history, and that's why I said earlier, you know, one of the themes of this whole thing is our cultural history. You know? And I'm gonna bring that up, you know, tomorrow when we're talking about polystyrene. By the way, everything connects, right? but you know, so you know, I don't fault Miss Willie for, you know, trying to advance this or bringing it to our attention. Although I gotta agree with Mr. Iligan a little bit. You know, you should maybe have done a little bit more personal vetting. But well, that being as it may, you know, I don't fault her. You know, it's not an ill-intentioned thing on her part. But I think, you know, we really, every so often we have to look, you know, at the past, yeah, to be able to make decisions, you know, in the present. And so I'm not going to be supporting this, of course. You know, I know we always like to do things fairly in government, but when you look all around us, government, it's so many unfair aspects, and it really is about resource allocation.
In the 60s, I looked forward to becoming a credit union member because it represented the community. To belong to a credit union was not that you could just go to a bank and open an account. It meant something. When you were part of a credit union, you knew everybody, and like Mr. Paleka, when your standard financial institutions who have a lot more stringent regulations for loans, the credit union helped me build my house also. So those kinds of things, when you have to weigh those things out in valuing your what institutions mean to you, you have to take into account how they affect your family and how they affect you personally. So that's the relationship that I think a credit union has.
Councilmember Aaron Chung brought up about the memories. And for me too. I grew up in a plantation camp, and each of our plantation camps actually had gotten a small credit union because that was our only affordable financial opportunity, you know, to start. My grandfather, I remember, started saving money. You know, there were opportunities for us. I got my first loan there so that our family could go to a trip together. You know, they worked with families to keep our communities, you know, healthy, and you know, in the aspects of making sure that, you know, I don't know who testified today about saying making sure people were happy, you know, because happy people are productive people. Happy families are, you know, great things happen. The credit unions were part of that. I remember we used to have parties too, free picture, family picture day, and those things at the credit union that just kind of helped us to build our community, strengthen our community. That's what the community credit unions are. They're more than just a financial institution. They were part of our family, part of our community, and helping to keep us strong together and our families strong. So I don't think, you know, it's fair that if this would go through, it would fall on the backs of our hardworking people. So when we talk about fairness, I don't think that would be fair because we rely on them. It's the same thing like the university and the community college. You know, a lot of our local families cannot afford university. Right now, we hardly can afford community college too now, you know. But those are the reasons, like banks and federal community credit unions, because it's a community credit union. You know, it's always about community. So it's helping, like I said, affordable financial opportunities. So I thank you for that, and I thank you, the credit unions, for coming out and advocating not for yourselves, you're advocating for the people. and for your members we are the community. So thank you so much for coming out and standing up for us. I bank at a credit union. Thank you.
You know, I sort of made it a point, whether it's this, next month I'm going to bring up another tax issue, so I'm probably going to get cut out, and that we need to look at these things. And somebody wasn't always at the meetings who was my co-chair. And I did speak with people in my community, and there are a lot of people that are suffering in my district, North Kohala, Declar, where the valuations have gone way up. So it is a complex issue. I do appreciate what the credit unions do and just trying to be fair. I want to feel, I'm going to keep pushing myself that we need to look at these issues. We need to look at it. I look at just talking to Bobby Jean, where we are in terms of needing wastewater projects or things in Hilo and Kona and what we're going to do. So I am going to withdraw this at this time. I do appreciate what everyone has to say. And again, I'm just going to keep pushing some of the issues so we at least discuss them.
Okay, thank you, Ms. Willie. So Bill 212 is withdrawn.